All last week, traders have been anxiously waiting for the US inflation report. The fact is that another inflation rise may intensify pressure on the US Fed, thus forcing it to raise the benchmark rate as soon as possible. This week, all eyes will be on the FOMC meeting that is scheduled on Wednesday. In our video review on InstaForex TV channel, we will take a close look at this and other events of the new trading week. Only on Tuesday, the macroeconomic calendar will contain important events. First of all, traders will focus on the UK labour market condition. According to the forecast, the number of unemployment claims may decline by 20,000. The indicator may fall for the second day in a row. The unemployment rate is also declining. Analysts suppose that in October the indicator dropped to 4.2%, thus approaching the pre-crisis level of 4%. Of course, such news is likely to boost the pound sterling. On Wednesday, December 15, China will disclose its industrial production report for November. In September, the indicator showed a significant slowdown. In November, industrial production is expected to continue recovering, increasing by 3.8% on a yearly basis. Notably, against the current epidemiological situation in the world, such a rise may encourage traders to switch to risky assets. The Australian dollar is likely to be under the greatest influence since it's the national currency of China's main supplier of raw materials. Also on Wednesday, traders will receive information about the UK economic situation. Thus, the UK will disclose its inflation report for November. According to the forecast, consumer prices may increase by 0.5%. On a yearly basis, inflation may accelerate to 4.8% from 4.2%, significantly exceeding the Bank of England's targeted level of 2%. Markets are likely to ignore the data since signs of the overheating economy are short-lived. Notably, last week the UK government reintroduced restrictive measures. Against this background, inflation may slacken. It means that the Bank of England has no reasons to alter the current monetary policy. In fact, the US Fed may also doubt the necessity to change its monetary stance. The US will disclose its retail sales report for November before the regulator announces its decision on the key interest rate. Analysts suppose that consumer activity may decline, whereas retail sales are likely to climb by 0.8%. In fact, it's a good dynamic amid the current growth pace of consumer prices. However, the data is likely to have a short-lived influence on the market since traders are looking forward to the FOMC meeting results. On Wednesday, close to the end of the US trade, the Fed will announce its key rate decision. Notably, not so long ago, Jerome Powell unexpectedly admitted the necessity to revise the parameters of the current monetary policy. Powell also said it's probably a good time to retire the word transitory to describe inflation. Nevertheless, most analysts suppose that this rhetoric will hardly affect the decision to remain the benchmark rate unchanged. In our video reviews on InstaForex TV channel, we will find out whether the forecasts come true or not. Subscribe to our channel and keep abreast of the latest information about the financial market situation. Stay tuned.